And I think we're live. Let me just double check once. Yeah. So, hey y'all, we are finally here. Today we are talking about Youves with Werner from Ubinetics. Werner has like a lot of experience working in traditional finance, and he's the co-founder of Ubinetics. And Ubinetics is the team that helped kickstart Youves and has been contributing to Youves and like basically got the platform off the ground. So today we want to like dive into what Youves is, how it works, like what role does it play in the Tezos DeFi ecosystem. So let's get right into it. So first of all, I want you to explain, Werner, how do you see Youves as a platform? Because we as consumers have a different notion of it, and often the creators like think about it in a different way, like from a vision perspective. So, like, I'd like you to take a stab at how you would explain Youves to somebody who's new to DeFi.
Sure. So first of all, thanks a lot for having me on your podcast. So our understanding of the Youves platform, we wanted to create a platform that allows users to create synthetic assets so that we would have a mix of people that are looking to contribute to the platform in terms of creating assets and selling them and potentially buying more of the collateral. So like in order to get leverage, that's really the main use case we see for the minters. And on the other side, we see the use case for the holders. It's people who want to stay within the crypto world, but exposure-wise move away from, say, just plain holding TES or
Right,
other coins and tokens.
right,
So with our first product, the uUSD, that was basically a stable token. Soon we will have the uDEFI token tracking the DeFi index that we defined a while back.
right,
And we're looking to do more of these tracker tokens in the near future.
right.
And
So, yeah, go ahead.
so really, we want to have a platform where people can get certain exposures to these synthetic products that otherwise they might find difficult to find.
Right. So to basically like wrap it up in a nutshell for the viewers, basically Youves lets you put up a collateral and then mint a synthetic asset based on that collateral. And right now the synthetic asset that it supports is uUSD, which is like an algorithmic stablecoin which is pegged to $1 price, $1 price. But the idea and the vision is to create like a plethora of synthetic tokens which users could provide collateral for and then mint. And apart from that, they have like a savings account concept as well and a staking pool as well. So right now with your uUSD, you can lock it up in a savings account and earn like a 6 to 6.5% interest on it, I think. And then there's a staking pool where if you hold the U token, which is the governance token of the platform, you
Mhm.
could stake it and earn a part of the revenue uh, of the protocol. So you like basically by holding the governance token, you're getting a piece of the pie as well for the platform. So that's something I really, really like. So that is what Use is as a platform right now. But like, what are you mainly contributing to at Use? Like, what are your core responsibilities?
So my background is in derivatives structuring and sales. So I'm very much a derivatives guy, and I worked in different jobs where I worked did these kinds of roles. So within Ubinetic, I'm the guy who's taking care mostly of the structuring of the synthetic assets and the incentive model of the platform,
Right.
and basically trying to find some kind of setup that works and that will allow this platform to have both interesting synthetic products and also be in some equilibrium that works.
So basically, you designed all the interesting mechanisms that we're interacting with as users when we use Use.
So yeah, I came up with suggestions initially on how I thought this could work, and then I worked with my colleagues on the development side to see what is actually possible in a smart contract world and what makes sense. And then
Right.
this was like an iterative process where we went back and forth and eventually defined how this should look like.
Right. And I'm sure it was a lot of work because when you look at use, you can tell that a lot of thought has went into the platform, not just on a mechanisms level, but on a product level as well. It's probably the best looking and one of the most intuitive platform out there on Tezos right now.
Thank you very much. Yeah, it was a
So
ton of work. It was so much work.
it shows in the final product. So basically, we've talked about what use is, how you contribute to it, but like, what was the motivation behind starting off Youves as a platform? Because within DeFi, there are a lot of opportunities of things that you can build, and especially on Tezos, there's a lot of space for things to build that don't exist on Tezos right now. Like, why start off with Youves? Like, what was the problem that interested you, which led to Youves?
We thought that in this space of DeFi platforms where you can create synthetic products and sell them, that even within Ethereum, we thought it's like where it's probably the most developed. We thought there's still some room for improvement because it's still a fairly new space, and like coming
Right.
from traditional capital markets, there's just a lot that we're not even close to yet. And
Yeah.
then we thought, okay, where do we want to be active? And there were also different considerations, but we, in the end, like all of us decided to go for a synthetic platform product. Synthetic product platform. And given my speciality, it was also that the one thing that fit me most.
Yeah. It's a lot of specific knowledge that you brought in from the TradFi world and applied to this platform, I think.
Yeah, I hope so.
Yeah. And like, how did you all take the call to build specifically on Tezos? Because I think you guys have been working on this for a long while. So like before, let's say February, March, April, Tezos was sort of like not very heard of. Like people were down here building and the community was still strong, but it wasn't very mainstream until like let's say February, March, April when NFT started booming. So like how did you all take the call to build on Tezos?
So we were discussing for a while what chain we should build it on. And of course, Ethereum was part of the discussion initially, but
Right.
we thought it would make more sense being on a chain where the DeFi ecosystem is still less developed than on Ethereum. And we wanted to be on a chain that is not too expensive because we wanted to make sure that it's not prohibitively expensive to do small transactions. And my colleagues, they had experience with different chains and with Tezos as well. And they suggested that this would be the best fit for us. And me being more of a hobby coder or so, I didn't really have strong objections. I thought, okay, if that's what makes sense, then I'm happy to go with that.
Right. So one point that really stuck out is that Tezos DeFi ecosystem is like still very underdeveloped. Right. So I think Youves has done a great job of being like a top platform in that category. But where do you see like Youves fitting into the DeFi ecosystem? Like Plenty is known for yield farms. Swap is the first DEX. There was like a proper DEX.
Mm-hmm.
There were before it, but this was the one that supported multiple token standards. So it really blew up. So, like, where do you see Youves? Like, how can it take Tezos DeFi to the next ecosystem? Like, what are a few options or like, let's say, products that it can unlock? Because right now it has uUSD, but we had algorithmic stablecoins before that as well. I know you have like big visions for use, which extends more than just not just a so algorithmic stablecoin is a lot of work, but it has existed before on Tezos. So what are a few things you're thinking around which could be like completely new to the Tezos space?
Sure. So besides all the tracker tokens I'd mentioned before, like the uDEFI and then potentially tracker tokens on euros and gold and other commodities and currencies and potentially other crypto indices, we're looking to launch a template for option spreads initially. So not sure whether you're aware of like how call options work or put options.
I'm like very briefly aware of them. So if you could like explain it, like I'm fine. That will be like really helpful.
So a call option is the right but not the obligation to buy a certain asset at a certain price, the strike price, meaning that like at the end of a certain option maturity. So if at the end of that maturity, the price is below this agreed strike price, then you don't have to buy it and you can just buy it in the market if you wanted to, or don't buy it at all. And if the price is higher, you can buy the underlying asset at this fixed price. And by definition, you're making a profit now because you buy it cheaper than it is traded in the market.
So basically, if I buy a call option,
Mm-hmm.
like not in the technical sense, but basically what I'm doing is longing an asset because I'm betting that this asset will go up. So I want the option to buy it at a lower price at a point in the future because I believe it will go up.
So really, like a call option is the option to go long if it moves
Okay,
in your favor.
right. And
And
if it doesn't, then what happens to your call option? Like, can you
then it
resell it
expires
back or is it wasted?
it expires worthlessly, and you pay the premium to do that.
Okay. So there's a fee attached to it,
Exactly.
right? But like it really limits your downside, doesn't it? Because if you buy an asset at a price and then it goes down, you're like making a percentage loss. But if you buy a call option for it and it goes down and you don't want to like cash in your option, then you're just paying a fee, which I assume wouldn't be as huge as the losses would be if it went down. Is
Correct.
that pretty much the idea
Exactly.
behind it?
You know exactly how much you can lose. So
Right.
it's basically
All
the
right.
premium you put up front is what you can lose. Now, there's certain issues with options in a blockchain world. We're using coins or tokens because the volatilities are so high, which
Right.
increases the price for all these options,
Right.
which that makes it a bit difficult. So that's why we went for an option spread to begin with, is where you buy an option at a certain price and you sell an option at a higher price.
Hmm. Okay.
And then it starts being a bit more tractable. And we're definitely looking to do more just plain vanilla options as well, without the like buying and selling at the same time.
Oh,
But
yeah,
we
wait,
thought,
can you go again? Can we take it a little back and can you go again and explain what's the difference between like plain options and option spreads as how you're thinking of implementing it right now?
sure.
Like what is the core difference behind both of those?
Uh, so a plain option is just basically is one option that you buy or you sell.
Right.
And option spread is a combination of buying and selling.
Okay. I think I get it a tiny bit.
Let me maybe show you something. Can I share my screen here? Is that
Yep,
possible?
yep. Go ahead.
Um,
There's like a share button down here. But like it's exciting to see that like I don't think options are very common even in like other DeFi ecosystems as well. So it'll be pretty cool to see them on Tezos.
Yeah, they are. Options are really, it's not that simple to go ahead with, like to find a combination that is at one hand a good user experience and makes sense for the buyer and the seller, and on
Right,
the other hand also works well in a blockchain environment.
right,
So here, maybe some words on the option spread. Assume we have an option on the test dollar exchange rate.
right.
We then have this combination of one option that is bought and one option that is sold. We
Okay.
define a certain notional, say 250.
So notional is like the point that you're starting at in the spread,
Say that would be the middle point.
middle point of the spread, and you're always starting at the middle point of the spread.
No, where you're starting is then a function of the price.
Okay.
So that
All
would,
right.
the middle point is kind of the starting point, and then this slope here has a what? This line has a slope of 5. So if the price goes up by 20%, the payoff goes from 250 to 500, and if it goes down by 20%, the payoff goes to 0.
Okay. So basically, in an option spread, you can. So basically, you enter an op when you enter an option, you buy it at a certain price, and if it like if price goes up by 20%, then the value of your option doubles. If it goes down by 20%, then the value of your option zeroes out.
Exactly. So
All right. That makes
um,
sense. Like not buying the asset exactly, you're just betting on the price of the price of an asset.
exactly, you look, you're either betting that it will go up or you're betting that it will go down.
Right. All right. That
And
makes
then you
sense.
see if, say, this structure, like starting at 250, going up all the way up to 500, having a minimum payoff of 0. If you buy this at 250, so basically any positive move will give you a gain. Any
Right.
negative move will make you lose. Now, if users were to bid this thing up to, say, 275, now you already need a certain performance in order to break even.
Right.
Otherwise, you're at a loss.
Right.
So crypto markets being the way they are, we assume that there will probably be a bit of an overhang of people looking to go long.
Hmm.
So if people were to bid this up, and there will be an automated market maker, say
Right.
it goes all the way to 300, then maybe at some point we expect this users will also come in and decide to sell, because then okay, if the price were to just not move or not move
Hmm.
too much, I already make a profit.
Right.
Does that make
Okay.
sense?
It sort of does. Yeah, that does. It's
Yeah, and
interesting to see this. By the way, like, can you use an option to somehow short an asset as well?
yes. So if you were to sell this call spread or buy the short call spread or the put spread, then it basically looks the other way around. So really, like if I buy this from you, then this
Hmm.
is my line, and for you it basically looks just inverted.
Okay. So basically, like an option introduces the chance of like making a bit of uh like basically longing or shorting an asset without actually having the asset.
Correct. And your downside and your upside in this case are both limited and defined.
Right. So it has like quantifiable risk along with like quantifiable payouts. It's not
Exactly.
completely unknown. It like reduces the unknowns and like the unpredictability by a bit.
Yeah. So what we're going to do with this is that there's going to be a 1 week trading window where people can buy and sell this against the liquidity pool that we're going to
Right.
introduce. And then once that 1 week trading window is over, the initial observation is done. Basically what is here now at 4 or wherever. And then from then on, we start observing how much does the price go up and down, up or down.
Right.
And 1 week after that, the thing ends, and then the buyer and the seller get the respective payout.
All right.
And it's fully collateralized, and basically you need to collateralize your potential loss with US dollars, and the whole payoff will be in US dollars.
So that introduces like a new utility for uUSD as well,
Exactly.
which will potentially like drive up revenue for the protocol as well, which will accrue to the U governance token holders. I see how well this whole like incentive chain is designed, where like everything within the platform accrues value to each other.
Yeah, we're really looking to find a product that is both attractive to users, besides just the plain, like the user who actually wants to trade. We will also have the liquidity pool where people can go in and basically benefit from having an edge as a market maker against the people who trade.
Right.
So this will lock up some US dollars, and obviously the trading will also generate fees for the platform again. And we hope that it will make the platform both more attractive for users and also more profitable. And again, as usual, the profit of the platform will be distributed to people who stake their U tokens in the staking pool.
Right. It's a really nice mechanism. I'm really looking forward to seeing this live. Like, do you have any estimates on like until when would like the options spread be live? Like a ballpark estimate.
Late this year, hopefully.
Also, you're planning to launch it this year itself.
Late or early January, like, let's see. But it really depends how many roadblocks we run into.
But that makes me really, really excited. I was expecting a longer time frame, but I'm glad to see it come around much, much sooner than what I expected.
Let's
Also,
see.
another thing, yeah. Good luck with it. Also, another thing that I'm really excited about on Youves is uDEFI, because for a lot of time I was like playing around with the idea of building in like a basket token or an index token myself on Tezos, but I was a little out of my depth on the economic side of it. So I'm like really glad to see that you guys have come out with it, and I've like played around with it on Granada as well, and it's like a nice user experience to like mint some tokens. So to give the like viewers a little more context, uDEFI is basically an index token which tracks the price of five DeFi tokens from different ecosystems. One of them is Cake, which is pancake swap from BSC, then Luna, which is like the currency for Terra, and then you have Aave and Uniswap and Link as well, which Link is like an Oracle system. Aave is a lending protocol on Ethereum and like multiple EVM chains, and Uniswap is like one of the first dexes on Ethereum. So it tracks on these DeFi giants and like reflects their performance in a crypto index. So I want to like understand how did you guys go about like structuring the mechanisms behind how the index works?
So for the index, we were basically looking for inspiration from traditional capital weighted indices, where you have regular observations like rebalancing dates. And on each of these rebalancing dates, you look at what is the market capitalization of all my constituents. And then you use that as the percentage, like you add them together and see, okay, how much weight does each of them make percentually? and
Okay.
then you use that as the weights for your index. And given a lot of these tokens, they still have certain distribution schedules. So we're not replicating that. We're really just looking how many tokens are there per one index unit, and then observe the price until the next rebalancing date arrives, and then we observe again what is the market capitalization, like how many tokens are there, and what is the current price.
So basically, if you wanted to say, it's just basically five tokens, and their weightage is by their market cap. So if like a token has double the market cap of another one, so if you were making an index just out of two tokens,
Mm-hmm.
and one had a market cap of double the other one, it would make up for like let's say 66.666% of the index,
Mm-hmm.
and the other one with half the market cap would be the rest 33.33. So if
Correct.
you extend this idea among like five different tokens, which is what you have with uDEFI, they have different weightages based on that,
Correct.
right? And they rebalance every like in how much time?
Every 6 months.
So every 6 months, basically the index rebalances and observes the new market cap and like shuffles the weight to reflect the new position of the market.
Correct. It's just because these tokens have different distribution schedules,
Right.
just following the price will cause the index to move away from the true market capitalization. But it's also very tedious to try to replicate any kind of distribution mechanism. So it's just easy to say every 6 months we reset the whole thing and we observe what is the true market capitalization now, and then we go with that.
But the question that I had was like crypto markets like move quickly and like things change very fast.
Mm-hmm.
So like why have a period of 6 months before each rebalance and why not do it sooner? Like were there any pros and cons or like trade-offs are discussed along with it, or was it like just a number that you arrived at intuitively or something?
At the moment, we just wanted to have something which is fairly easy and understandable, and also we may go on a like we may fully automate all of the back end of this, but for now the calculations are still fairly manual in an Excel sheet. So I mean, the rebalancing calculations, not the daily calculations.
Right.
And we'll see. I mean, also we need to observe whether like how much we really diverge from the true market capitalization. And what's also important to see is that the market cap is something that we use as a common way of replicating or of generating this kind of index. But for most users, in the end, it's the price performance that they're interested in, and that won't change.
Okay. And why do you say like it won't affect the price performance?
I mean, if I were to buy a number of uni tokens and cake and link, and I just buy them, in the end, I'm not necessarily benefiting from any future release of these tokens, but I'm
Okay.
now exposed to any moves in the price.
Right.
So, and with the DeFi index, we also have that yes, any kind of change in number of tokens that are out there is not immediately reflected. It will take till the next rebalancing date, but you're capturing the price performance.
Okay. Yeah, that makes sense. And when does uDeFi come out on mainnet?
We hope this week, maybe next.
Again, I'm really happy it comes out that quick. I tried playing around with it on the testnet, and I'm just like really excited to see it live and working. So similar to how with uUSD you have like a savings account. So
Mm-hmm.
like how does that savings account work? Like where is the 6.5% yield generated from? And like, would you have a similar concept for every synthetic asset that is created on the platform, or is that something that is exclusive to uUSD?
Sure. So the adaptive interest rate that we have is a feature of all these tracker tokens, unless we redesign them at some point in the future.
Right.
That we would definitely check with all the users and just go through the normal process. Minters, they pay a certain interest rate, the liability interest rate, and savers, they get interest rate 1% lower, but based on all the minted assets out there. And then that amount of interest rate that's generated is distributed to people who put their tracker tokens into the respective savings pool. So that's where the
Okay.
interest rate is coming from.
So savings pool is basically redirecting the interest that the minters are paying to the people who have put it into a savings account.
Exactly, minus the 1% per annum that the platform captures.
And that what the platform captures, does it go to the use staking pool or where does it go? To the treasury or what?
Yeah, that's revenues of the platform, and then the profits are distributed to the staking pool.
And is that 1% the only way the platform captures revenue, or are there other mechanisms as well?
There's the 1% interest rate difference, and there's the minting fee as well, the 1.5625%.
All right. That is pretty nice. And
So once the options are there, then the options will generate some fees as well.
And same with uDEFI as well, right?
Correct. So for the time being, the uDEFI will have its own savings pool, and that savings pool will be fed through the fees generated from uDEFI.
Right.
And similar also for the profits. We will most likely go with a separate staking pool for the U tokens to benefit from the uDEFI fees.
But like, why not pool the U token pool together for all the synthetic assets? Like, is there a technical trade-off, or like,
Yeah, at
is
the
it
moment it's a
somewhere?
technical thing, because at the moment, like at some point we will redesign all of these contracts with the learnings that we have so far.
Right, like a
But
Youves V2.
yeah, I mean, the U per se is okay, but just like the US dollar, we see certain things. Maybe that could be improved here or there, and we can't just reroute the fees from the US dollar somewhere else.
Okay.
So in order to not do too many changes with this new uDEFI, we will have separate pools. But we're aware that it's probably not the most elegant solution. So this may change eventually when we find we have a solution that is both attractive from a user experience, but also makes sense for the overall incentive model.
Right. Yeah, so right now, basically, uDEFI and like a few synthetic assets that are coming up in the near future will have their own savings account and their own staking pool
Yes.
currently, right?
But yeah,
Right.
as I said, eventually we know we need to harmonize that a little bit, but then
But
we
for
need to
now,
make
it
sure.
works. Like, yeah.
Hmm?
Yeah, I'm saying like, but for now it works because like it's getting the platform off the ground, getting all the pieces in place, and then figuring out like how you can redesign it to be the most elegant it can be from all that you've
Exactly.
learned.
Because also, I mean, I'm pretty sure we will have some learnings again once uDEFI is really live on the mainnet. And then we have
Right.
two assets to juggle with. And yeah, that's really like we don't want to optimize prematurely. We really want to understand better how the whole thing works, how the community accepts it, and then we take it from there.
Pretty nice. I can see Use being like the flagship DeFi platform on Tezos with
Thank you
all
very
that you're
much.
coming out with.
Obviously, that's our
Like,
hope, but
I mean, everybody in the Tezos ecosystems that I've talked to loves Youves. Like everybody is really, really happy with the experience and the whole design of the platform itself.
I'm very glad to hear that.
Yeah. So finally, I just wanted to touch upon the fact that we've talked about earlier before as well, that you see Youves as becoming a DAO in the future. That's why you have a governance token as well. And
Correct.
like basically, what are your plans in like transitioning Youves from like an entity that is mainly run by core contributors right now to and right now as well, you take a lot of feedback from the community and implement that. Like with uDEFI token as well. I remember you guys brought out a form and basically people could vote on which token they wanted to see first, right? But like, how do you plan to formalize the transition from just like an entity that is run by some core contributors to a proper DAO run product?
So I don't have a specific date yet, and also I'm not a developer, so I can't really give you too many specific details, but it is
Right,
definitely on our mind that this is something that we want to do rather sooner than later. We didn't want to do it from the beginning because in the beginning there were just basically no governance tokens out there, and we want to make sure that it settles a little bit, that people who want those tokens, they have them, and that also there's a certain minimum amount out there, which we believe we've reached that threshold now. And so now we just really need to find a time and make this, like, spend the time and effort to implement this and then change this. I'm not sure whether we'll be able to do it this year still, but yeah, again, like, this is really a matter of how quickly can we get it done. Because
right. But like
the
the
multi
intent is to do it as soon as possible.
correct. The multi-sig setup really was a bit of a crutch that we used in the beginning so we could get the project off the ground.
Right. That makes sense. A lot of products take this approach with progressive decentralization, where they start with a degree of centralization because that is necessary, like rapid iteration is necessary for getting a platform up and running. And once it has like a certain amount of network effects or has reached a certain point of maturity, then like sort of completely hand it over to the community.
Mm-hmm.
Is that like the idea that you're playing around with for Youves as well?
Yeah, we really want to have this as a platform, like, for the users, like, guided by the users, and we like to keep contributing as core contributors, but really it should be very clear that users are in control of this, and it's not Ubinetic.
Right. That is awesome. That is quite amazing to see because right now there's like a lot of governance tokens floating around in the Tezos space, but only one of them, which is like KDAO, Colibri's governance token, which actually does something of worth
Mhm.
for governance. So I'm like excited for more platforms follow going down that path and like converting the actual app to becoming a DAO rather than just like governance tokens for capturing upside.
Mhm.
Yeah. All right. So that's pretty much what I had planned and the questions that I had for you to cover in the stream. If there's anything you want to say before we close out or mention, go ahead. Feel free.
Sure. So yeah, we're very happy with the growth we had so far, and of course, there's every now and then there's certain hiccups and things where you think like, we should have done this differently and that. But overall, we're really very happy with the way it's performing. And yeah, so as I mentioned on the tracker tokens, the uDEFI will come out fairly soon. Then probably other tracker tokens as well, and then we're really curious how well the options are going to be accepted by the users, how much
Right.
interest there is going to be. And if that's something that works well, we could definitely imagine putting more effort into that space as well and doing more option payoffs or even just uh, different underlyings, maybe different tenors. So instead of 1 week, we could do 1 month. We could also do an overnight, just 1 day. So this, once the template is set, we really be very flexible in what to do next.
Right. Awesome. So, yep, I'm really excited for options in uDEFI and other tokens as well. Thanks for taking out the time for coming on today. I learned a bunch from like just going through how Youves is built and where it's going, and I'm like super excited for the Tezos DeFi space. Thanks to you guys. All right,
Yeah, thanks a lot for
that's
having me.
yeah, definitely. I'd love to have you for another one whenever you're available to like get into the actual details of how the peg is maintained or like how does the tracker token exactly works, like get into the weeds of it. But I think it's a pretty nice intro and like a overview into how use works right now for a lot
Sure,
of
let's do
people.
that one of these, like when it makes sense in the coming weeks at some point.
Definitely. Awesome. Thanks you all for watching. Thanks Werner for coming on, and that's it from us today. Bye bye.
Bye bye.